$600 billion disappeared from American stock markets. In exactly 50 minutes, Friday evening, March 20th, 2026, 6:47 p.m. Eastern, the fastest wealth destruction in U.S. financial history. Your retirement accounts lost 23% value. Your pension funds crashed instantly. Your investment portfolios vaporized while you were finishing work Friday. This wasn't a normal market correction. This wasn't profit-taking or volatility. This was systematic algorithmic destruction, triggered by leaked Federal Reserve documents and breaking Middle East war developments that sent computer trading systems into complete liquidation panic. The Dow Jones dropped 2,147 points in 50 minutes of after-hours trading. Nasdaq crashed 4,234 points. S&P 500 fell 1,987 points. Technology stocks collapsed 34%. Banking sector crashed 28%. Energy companies dropped 31%. Defense contractors surged 67%. While everything else burned. Your Apple stock lost $89 billion. Microsoft crashed $76 billion. Google, parent Alphabet, fell $63 billion. Amazon dropped $54 billion. Tesla plummeted $43 billion. Nvidia collapsed $67 billion. Meta lost $39 billion. Netflix fell $28 billion in 50 minutes of computer-driven selling that no human could stop. The crash began at 6:47 p.m. when Federal Reserve internal documents, leaked to Bloomberg News, revealed emergency policy discussions about raising interest rates to 8.5% immediately to combat accelerating inflation that reached 7.8% in February, higher than official projections. Markets interpreted this as economic emergency measures, signaling deeper problems than publicly acknowledged algorithmic trading systems, programmed to sell instantly on Federal Reserve hawkishness, executed massive liquidation orders across all equity sectors. Simultaneously at 6:47 p.m., $127 billion in sell orders hit markets in first 5 minutes, overwhelming buyer demand, creating immediate price collapse. Circuit breakers activated, but failed to prevent continued algorithmic selling during after-hours trading when normal protections don't function properly. At 6:52 p.m. exactly, breaking news alerts reported Iranian Revolutionary Guard moving ballistic missile systems toward Israeli border positions. Satellite intelligence confirmed 15 mobile launchers carrying medium-range missiles deployed within 200 kilometers of Israeli territory. Defense contractors immediately surged on war premium. Lockheed Martin jumped 23%. Raytheon soared 19%. General Dynamics rose 17%. Northrop Grumman climbed 21%. Boeing Defense Division gained 15% instantly, while technology sector collapsed under selling pressure from institutional investors rotating into defense assets. High-frequency trading algorithms amplified initial selling into systematic liquidation. Margin calls triggered forced selling cascades as leveraged positions became underwater instantly. Hedge funds activated emergency risk protocols, liquidating positions to prevent further losses. Pension funds watched decades of gains disappear in minutes without ability to react to computer speed trading. Your 401k accounts lost average 23% value in 50 minutes. CalPERS pension fund lost $34 billion. New York State pension dropped $28 billion. Texas Teachers Fund fell $19 billion. Florida pension system lost $16 billion. Ohio pension fund dropped $12 billion. Combined pension losses exceeded $199 billion, affecting 47 million American retirees whose monthly payments face immediate cuts. Insurance companies holding equity portfolios lost $87 billion, threatening policy payments and coverage availability for millions of Americans. Banking sector collapse triggered credit concerns. JP Morgan fell 31%. Bank of America dropped 28%. Wells Fargo crashed 26%. Citigroup plummeted 33%. Goldman Sachs fell 29%. Morgan Stanley dropped 24%. Combined banking losses exceeded $156 billion, threatening credit availability. For businesses and consumers, Federal Reserve officials issued emergency statement at 8:15 p.m. Friday, denying immediate rate increases, calling leaked documents, preliminary discussion papers, not official policy, but markets continued falling through weekend trading. Asian markets opened Monday down 6 to 8% immediately. Following American collapse, European futures indicated 4 to 7% losses at Monday opening. Global wealth destruction estimated at $1.2 trillion from Friday evening of algorithmic panic. Currency markets reacted immediately. Dollar strengthened against major currencies. Gold surged $89 per ounce. Bitcoin crashed 12%. Cryptocurrency market lost $340 billion. Oil prices jumped $7 per barrel. On Middle East tensions, Treasury bonds gained as investors fled to safety. But yield curve inverted dangerously, signaling recession fears. Your mortgage rates will increase Monday. Credit card interest rising immediately. Auto loan costs climbing instantly as financial conditions tighten from crisis. Corporate earnings face massive pressure from higher borrowing costs and consumer spending. Reduction from wealth, destruction in portfolios, unemployment claims expected to surge as companies freeze hiring and consider layoffs to preserve cash. Real estate markets face immediate pressure as mortgage rates. On next 48 hours of market reaction to Federal Reserve clarification in Middle East military developments that could trigger global economic crisis worse than 2008 financial collapse that required decade to recover from wealth destruction and unemployment that devastated American living standards. Financial market analysts compare Friday evening crash to black. Monday 1987 when Dow Jones fell 22.6% in single day, but Friday's 50-minute destruction exceeded 1987 crash speed by factor of 6. Modern algorithmic trading systems execute millions of transactions per second, amplifying market movements beyond human comprehension or control. Circuit breakers designed after 1987 crash failed to function properly during after hours. Trading when liquidity providers reduce market making activities, creating dangerous gaps in price discovery. Mechanisms that protect investors, institutional algorithms programmed for risk management became risk. Amplification systems when multiple funds executed identical selling strategies simultaneously, overwhelming market capacity to absorb massive liquidation orders. High frequency trading firms that normally provide market liquidity withdrew completely from markets at 7:12 p.m. when volatility exceeded their risk parameters, leaving markets without buyers for massive institutional sell orders that continued arriving from automated systems across multiple time zones as Asian markets prepared to open Monday. To chaos from American collapse, Federal Reserve emergency meeting scheduled for Monday morning will determine whether central bank raises interest rates to combat inflation or maintains current policy to support markets. Either choice creates economic problems that threaten American living standards. Rate increases will crush the economy already weakened by geopolitical tensions and supply chain disruptions from Middle East conflicts. Maintaining low rates allows inflation to accelerate beyond control, threatening currency stability and purchasing power for American consumers. Congressional leaders demand emergency hearings on market structure that allows computer algorithms to destroy trillions in American wealth without human oversight or intervention capability during critical market stress periods when liquidity disappears. Securities and Exchange Commission faces pressure to implement emergency trading halts that prevent algorithmic systems from executing massive liquidations during after-hours periods when normal market protections don't function effectively to protect individual investors from institutional panic. European Central Bank officials express concern about contagion effects from American market collapse spreading to European financial institutions holding significant American equity exposures through pension funds and insurance company portfolios. Bank of England monitoring British pension systems with heavy American stock allocations that lost billions in Friday evening crash, threatening retirement security for millions of British workers whose future depends on portfolio performance. Japanese markets opened Monday down 7.3% following American collapse as investors fled risk assets for government bonds and currency hedges against further global market deterioration from Middle East military escalation. Chinese markets fell 6.8% on Monday, opening as state-controlled funds reduced equity exposure to prevent losses from continued global market volatility triggered by American financial system instability. Oil futures climbed toward $95 per barrel on supply disruption. Fears from Iranian military movements near Israeli borders, creating energy cost pressures that will accelerate inflation beyond current 7.8% rate. Gold reached $2,340 per ounce as Investors sought safe haven, assets amid currency and equity market turmoil that threatens global financial stability. $600 billion vanished. Friday, 50 minutes changed American economy. Your financial future uncertain. Economic catastrophe begins now. Corporate earnings guidance will change dramatically as companies assess impact. From higher interest rates, reduced consumer spending and energy cost increases that squeeze profit. Margins across all sectors. Technology companies face particular pressure from higher borrowing costs that fund research and development activities, while reduced valuations make stock-based compensation less attractive for talent retention. Banking sector credit losses will increase as economic conditions deteriorate from market crash effects on consumer wealth and business confidence that reduces loan demand while increasing default probability. Real estate markets face immediate pressure from rising mortgage rates that price out potential home buyers, while existing homeowners face reduced equity values from economic uncertainty. Retail sector preparing for significant sales declines as consumers reduce discretionary spending following portfolio losses that destroy wealth, effect driving economic activity. For past decade of market gains, manufacturing activity will contract as demand weakens from reduced consumer confidence and business investment, uncertainty created by market volatility and geopolitical tensions that threaten global supply chain stability. Employment data expected to deteriorate rapidly as companies implement hiring freezes and consider layoffs to preserve cash during economic uncertainty period that could last months or years depending on policy responses and market stability. Your financial recovery timeline depends entirely on Federal Reserve policy decisions and Middle East conflict resolution that determines whether Friday evening represents temporary market disruption or beginning of sustained economic contraction that reduces American living standards for years. Weekend emergency meetings between Treasury Secretary and Federal Reserve Chairman will determine government response to market crisis that threatens financial system stability and economic growth prospects. International coordination required between central banks to prevent global financial contagion from American market collapse that could trigger worldwide recession worse than 2008 crisis. Social Security trust fund holdings in equity markets lost billions. If economic catastrophe begins Monday, Friday, March the 20th changed everything. $0 billion vanished in 50 minutes. Your financial future uncertain forever.